PowerCorp reported a third quarter beat. Bird Construction produced a weak outlook for the current quarter. Let's get more from Grant White, Portfolio Manager and Investment Advisor at Endeavour Wealth Management. Grant, great to see you. Thanks for joining us. Give us your take on the PowerCorp earnings, please.
Yeah, great to see you, Andy. PowerCorp, this is an all right report for sure. I mean, I think PowerCorp continues to do what PowerCorp does. They chug along. I mean, this is a really good core holding kind of a company, and we've owned it for a long time. So the report is looking strong. I think why I'm really optimistic about PowerCorp going forward is, you still have that discount to NAV. So as in, the share price, the market value is trading below what the asset value, or at least what we value the assets at, by about 12%. So we like it from that perspective. We still feel we're getting a discount on pricing. You've got a nice dividend yield as well right now, around 3.5% or so. And if you add in the share buybacks in there, you're getting slightly above 4% perhaps on a yield basis. And so, all things in, it's a nice report. We still like PowerCorp as a nice buy right now, and I think it's a really good core holding. Nothing super exciting about this one, to be honest. It's just chugging along, and that's what PowerCorp tends to do.
It's interesting, of course, PowerCorp has a piece of Wealthsimple, the online financial services platform, and that has now been valued at something like $10 billion, and that's great for PowerCorp, obviously increasing the value of that investment.
Absolutely. I mean, credit to the Demery family, credit to PowerCorp in general for, they've been in with Wealthsimple for some time now, well before Wealthsimple was ever popular. And so, they've really been on the innovative side of fintech over the last number of decades. And so I think PowerCorp has made some very strong investments. They continue to do that, which really complements well their core businesses, whether it's Canada Life, Great-West Life, et cetera. PowerCorp has done a really, really good job of finding those innovative solutions like Wealthsimple. And I think that, that should bode well for the future as well. So you can really like PowerCorp for their execution, their management. They've been solid over a number of decades now. And again, I just go back to, I think you can still get them at a discount to NAV, which is nice. The discount to NAV is slight. I mean, it tends to range between 10 and 30%. So we're at about 12% discount right now. So it's not the biggest discount we've ever seen, but still a really nice discount to the net asset value overall. And to your point, Wealthsimple is now adding to that net asset value.
What about Bird Construction? Investors not thrilled by the outlook for the current quarter?
Yeah, I think, Bird is still an interesting company in my mind. I mean, one thing we really like about them is that they've had a good ability to execute over throughout their last number of years, especially. They have a huge backlog, well over $10 billion now in backlog projects. And so, I think the real question with Bird right now is, can they maintain margins? And that was one of the, the things that we obviously didn't like to see in this latest report, is that the margins dipped down to about 8.9%, I believe, on the report. If that continues to struggle, like due to cost overruns or you name it, then that's going to be a bit of a problem. Their ability to execute on that backlog is also going to be something that we're watching as well. I mean, it's nice to have projects, but if you can't execute on the projects, the money's not going to come in. And so I think Bird is in a good spot. Don't get me wrong. We have it listed as a buy. We've owned Bird for quite some time for clients. And I think that Bird is in a good place. Pricing is not bad right now as well. So I would be buying on the dips on this one. But naturally, I think the execution is going to be key for them. And so we're going to be watching management closely over the next number of quarters to make sure that they can stay on track.
We saw some selling in Disney, the forecast not delighting investors.
Yeah, I think Disney is also one where, we've got it listed as a hold. And I think Disney is another one where, I think if anybody's surprised by the fact that TV is struggling, as we're seeing in the report, I don't know why that's such a surprise, to be quite honest. I mean, I think we should be very happy with where streaming is heading for them in terms of profitability. I think we should be very happy with how parks have done. So those are two major cores of their business. The challenge is the legacy side of the business, whether it's TV and then obviously monetizing their existing brands and content. And so with Disney, I think execution is going to be really, really important, but it's more about cost cost measurement over the next number of years on that legacy side of the business, because the growth engines are there. I think they just need to be very careful on cost overruns on the legacy side of the business. And if they can do that, then I think Disney's going to perform very well. But the problem right now I have with Disney is not necessarily related to the business. It's just pricing. They're trading at about 20 times earnings. And so they're a little bit, I mean, I'd say they're fairly priced. It's not necessarily expensive, but it's certainly not cheap either. And so, again, I think Disney's a great company and there's a lot to like going forward, but I'd be just a little bit cautious on price right now. So, again, it's another one where if we can get a good buying opportunity, I'd be looking to add to our Disney position.
Yeah, and they're in a face-off with YouTube. They want to get their channels on YouTube TV. And, of course, YouTube are a growing presence in actual TV viewing. It's not just for silly cat videos. But those two, Google and Disney, just facing off here. They can't agree on terms to get those channels, how much YouTube TV will pay.
Yeah, well, don't tell my daughters it's not about cat videos, but yeah, I completely agree. I mean, I think that, YouTube, YouTube's the biggest streaming service in the world, right? Nobody thinks about it like that, but it is. And so it's not even really that close. And so, yeah, I mean, I think it's critical for Disney to, to get their content onto as many platforms as possible as well. And I mean, this is a bit of a change from the original idea when Disney Plus launched, obviously, where they thought they could just distribute their own content on their own. I think it's wise to have their content on as many platforms as possible. And so, given YouTube's strength, and it doesn't look like that's going away anytime soon, I think it would be wise to figure out a deal. But it has to be a good deal at the same time, because it's not like Disney doesn't have distribution options, right? So it has to be a good deal, and and I think there's a win-win on both sides there if they can get that done.
Grant, thank you very much indeed.
Yeah, always a pleasure, Andy. Thanks so much.
Grant White, Portfolio Manager. There's a look at Grant's calls by PowerCorp, by Bird. But he's wary of what is. He's a case to be made for buying it, but he's also inclined to just hold it for now. Grant White, Portfolio Manager and Investment Advisor at Endeavour Wealth Management.